Welcome back to another episode of the Easy Button Real Estate Podcast with myself and Mr. Tucker Merrihew, who is co-host. And today, guys, we have a fun one. We just wrapped up a weekend in San Diego with not all of our team, but a good portion of our leadership team, as well as, 14, 15 clients, and got to do a lot of fun dinners and some days in a mastermind, doing hot seats and doing some presentations. And I think we learned a lot about what's going on out there right now. And we had, it's a good sample size because we had people from the East Coast, Midwest, West Coast. So we weren't biased to one market and what we learned and patterns and things we saw. But before we get into all of that, Tucker, we haven't been on the mic in a few weeks. If you want to update the audience on how that build's coming along, what's going on down there in Naples, as I know your kids are starting school again here soon, which is, I know, one of your favorite times of year too.
Yeah, this week's been a little hectic. Obviously I was in San Diego. You live there, but I was in San Diego for 4 days last week. So coming back this week was a little hectic, but it's the last week before kids go back to school. So they go back next week. They've got no camp this week, so I got two kids kind of at home trying to entertain themselves most of the week, which usually means that I want to get the hell out of there as quickly as possible and go to work because they're getting stir crazy. But they start next week. But my daughter starts middle school, which is crazy. It's wild. But and then my son, obviously, he starts fourth grade, so he's still got another couple years left in primary school. But the middle school thing with a daughter, this is going to be an interesting year for fatherhood. That's for sure. But as far as build go, it's going good. We've had some major thunderstorms this week, so we're in our rainy season. We're kind of approaching, peak hurricane season starts towards the end of this month and runs, or maybe it's like halfway through this month to halfway through September generally. And so we had a couple storms this week that ripped through that were just thunderstorms. Like yesterday, a bunch of trees got blown down. I had to go to all the rentals afterwards and fish all the patio furniture out of the pools for guests that were coming. So it was just a mess. But it also allowed us to kind of see, we got our roof dried in for the big build, and we found a couple roof leaks. So fortunately, we didn't put the tile down yet. They just dried it in, and they didn't do as good of a job as they probably should have. And so the rain let us find a couple leaks, so that was good. But we've got rough in plumbing done, we got rough in electrical done, we got rough in HVAC done, and we're starting stucco on Monday, and we're going to start doing some drywall here real soon. So we're starting to come together. We're starting to dig the pool Monday, just kind of gradually getting towards the finish line. But then we also have started finalizing the plans for our next build after this. So we're trying to keep it consistent now moving forward with a piece of dirt that has a house on it. I bought it a couple of years ago, but the market just got all wonky. So I decided to kind of just pump the brakes on tearing it down and just rent it out for the time being until I felt a little more comfortable with where the market was headed. So I don't know that I feel more comfortable with where the market's headed, but it's about that time. So we're just going to kind of keep it rolling and try and build the best product that we can there as well. So we're moving along, moving and grooving. So pretty happy about that. And, rentals wise, we're as busy this summer as we've ever been, which is cool to see. I mean, this week I've got full occupancy all week. I came back, and just been kind of dealing with, had an AC unit blow, had a couple toilets break, typical rental stuff. But, fortunately I've got, people in all the houses. So, it's been a busy week, but a good week, on the heels of what I thought was a great event that we had last week in San Diego.
Yeah, we'll talk about a lot about that event, but one of the things you just said about where the market's heading, I don't know if the market's heading anywhere right now. I think it just is kind of going to be in idle mode for a while. I know rates jumped towards 7% in the last 10 days or so. So, I don't think anything's going to happen for a while until I think we have some kind of conclusion on Iran and in that whole situation. We can't call it a war, right? It's a military engagement or a military operation. Not a war, but whatever.
A conflict.
A conflict, mild conflict. Yeah, but once that settles down, I think we'll get a little more of a direction. I know as the Fed kind of changes leadership and Trump nears the end of this presidency, I think I don't think he'll want to leave office this time with, at least part of me thinks he won't want to leave office this time with, not fulfilling on his promise and two really rough real estate markets under his watch. Now, part of me thinks he also doesn't care if he leaves office and doesn't fulfill all of his promises because he's not running again. And, he's kind of banking on more this side if he's going to be the world peace guy. So we shall see there. No idea what that's going to go. I'm actually, talking about thunderstorms. I'm headed down to the Bahamas tomorrow, and the whole weather forecast for the next week is a lot of thunderstorms. So I'm sure I'll get to participate in the southeast thunderstorms right now. And it's every time we're there, it says that, and then they come and go throughout the day. So it's never like it's just storming and raining all day, but it'll be hot and muggy down there for sure.
Yeah, it's usually only part of the day. But what's interesting is, we've got supposedly a president that was like a real estate guy, but he's done nothing but absolutely, not help the real estate market. But I pulled up an interesting graph last night. I had Grok make it for me, and I've always been curious, like how often we've had like a booming stock market and a lackluster to compressing real estate market. And there's been a couple times in history. I wouldn't call it like a major boom, but like the .com boom, the market was okay during that time, but it was kind of fake in a way because people were, giving values to companies that hadn't even made $1 yet. And then when they realized that just because somebody had a website doesn't mean that it's actually a business. And that kind of, created the .com bust after that. But if you look at where the stock market's gone over the last few years, and during that same time, the real estate market it's kind of been divergent of that, and it's actually gotten worse. If you look at the graph of that, it's really kind of frightening because the increase in the overall value of the stock market has gone up like exponentially, more than any other time in history. But the real estate market has gone like that, and so we have the widest divergence in markets that by probably a 10x multiple. That I've seen when I look at this graph, and it kind of scares me a little bit because what goes up always comes down. That's the way it works with markets. Whether it real estate, I guess what goes up quickly always comes down. Whether it's real estate or any other type of asset. And so I don't know what to expect. I was on the way into the office today, I was thinking about it, and I was like, all right, well maybe the silver lining is this, right? If the stock market, which I believe to be highly overvalued, and it's just this rotation trade of just bullshit that pumps up numbers. That and everybody thinks that AI is like going to be the savior of every company ever, or at least the big ones. Yeah, which like okay, yeah, but I don't think it justifies the values that the stock price values right now. But I'm hoping that this is what happens at the point that the air starts to come out of the stock market and all of this CapEx spending on crazy AI, what might be, a lot of it will probably crash and burn. And as the air starts coming out of the stock market, maybe there'll be a rotation trade in terms of where people are putting their money. And they may shift it back into another market, i.e. real estate that's been flat or compressing for a number of years, which makes it a fairly safe play at that point. And if that's the case, then, it gives us, strong footing or a strong foundation underneath to kind of build from moving forward. But that's kind of my silver lining hope, I guess, at this point. But it's something's going to happen. That's for sure. Nothing goes up that quick and that radically if you look at the chart. And doesn't have, some sort of a mirroring effect to it on the other side, doing the opposite thing. So we'll see. But all we can do right now in terms of real estate is either A, buy it as good of a discount as you possibly can, or if you're retailing property, make sure it's the absolute, one of the best properties on the market. And, those are kind of the two ways that I'm protecting ourselves while we're still staying fairly active in what would be a rather sluggish market.
And I think that AI bubble is a bubble to a certain degree. Like there's real, applicable use cases to AI. And then, we talked about those before. There's a lot in real estate, a lot in general. But when you look at what tokens and credits are going to cost using any AI model, once all the venture-backed funding starts to run dry a little bit, that's really supplementing, because really the models and usage are a lot more expensive than we think. It's just being overshadowed because they have so much venture capital where they don't have to charge you as much. They're trying to build up membership revenue and monthly subscription revenue, right? But and a lot of these models are now to go into tokenized models where they're trying to charge you for tokens because they're realizing they can't just charge you $30 and let you do whatever you want on their platform. So I think we have a rude awakening coming. The same guys telling us, AI is going to dominate the world are the same guys that in 2021 we're saying that we're going to live in the metaverse in 4 years and no longer go to the office and no longer see.
Yeah, what happened to the metaverse? Yeah,
dude, like literally Facebook changed their name to Meta. Like that, that's how convicted the tech world was that we're going to live in the metaverse. And I think one of the things with the tech world is it's a lot of weirdos and they're really out of touch with reality, I think. And, I was telling some guys at our event this last week who were asking me about AI. I'm like, you guys, 99% of business owners, especially small business owners, which is, most of American companies, don't even know how to use Zapier or log into GoDaddy or, like there's so many steps behind building their own CRM or using AI models. It's mind blowing. So I do think we're in the first inning of AI, but I think innings 2 through 9 are going to be, a reality check of what it is. And it's an amazing tool that's going to augment a lot of companies and make them it's made us a lot more better and efficient. We can build websites, maintain landing pages, save a lot of costs, do a lot of development work, without needing a big bulked up, web dev team. There's a lot of applications for sure. I'm not, contradicting that. What I'm saying is that for you guys listening to the show, it is a bubble. And we are in a weird time right now where, again, we're not going to ever live in the metaverse. I don't think that's how we're wired. AI is never going to dominate your life, in the way they're making it seem, at least, in the near future. I think the robots coming out are cool and everything, but same thing. I think people are going to think it's really weird to have a robot in their house. All right. I just think that's going to be weird. And then, number 3 on that is, Tucker's talking about, how to kind of insulate yourself and that kind of take us into topic 1 from the event. But so much of the talk at this event this last weekend was about, 1, hey, I've never been in a good market. A lot of these guys got in the business in 2021, 2022. They didn't really experience the fullness of a really hot real estate market, but they're still in the trenches building their business. I think a lot of you guys are listening to this. I know it can be very tempting to pivot and change what you do because the real estate market's hard right now. But, Tucker talked about it. I talked about it this weekend. Most people make their wealth in real estate in a very short stint, right? They're in real estate over 30 years, 40 years, but a lot of their massive leaps in net worth and liquidity happen because they have 4 deals they're doing and the market jumps and it's a hot market and they make an extra $200,000 per deal. And so I think so much about making it in real estate is making it through each cycle the best you can. So I think the first topic, Tucker, that'll be valuable is the whole, kind of on that point, the liquidity side, giving yourself runway, not having to make bad decisions and chase deals and being able to stay in the game through each cycle so you can catch upswings.
Yeah, I think that was the reoccurring theme that I took away from, the hot seat sessions. And it's not a knock on anybody that was in the hot seats. It's just the cycle that most people put themselves in. And it's a cycle that is more painful right now than it is in a hot market. Because in a hot market, houses are essentially liquid, right? You can sell one to anybody at any point in your process, right? You buy it at wholesale, you can sell it right away. You do a little bit of work and clean it out, you can sell it. You do more work, you can sell it. You got retail buyers lining up. Right now, it's not necessarily the case, at least for, you're not going to profit all the way through that. There may be a section of that where you don't profit and you've got to take it to fruition in order to hopefully realize a profit. And then when you take it all the way to fruition, you're trying to maximize your profit and the house is fairly illiquid in this market. I mean, it takes a while to convert it to cash. And so there were a lot of guys that, they were on the tail end of that cash cycle where, they're strapped, hoping, they're trying to move some inventory so that they can refill their bank accounts and not be, stressed out. And then obviously, not make bad decisions and just kind of resume business as normal. And so it really got me thinking about, when I first started buying rentals back in like 2006, I always made a rule for myself that I wanted like a certain amount of liquidity per rental property that I had. After buying it, after whatever down payment or whatever costs to acquire, but having just, X amount of dollars set aside in case shit happens, right? And it wasn't a ton back then because I didn't have a ton of money, but it was enough that, if something happened or it went vacant, I could cover the note without issue for a while, or I could replace the, the furnace or, whatever happens because something always happens. I mean, this week AC unit blew up on me, right? So, that's where it started. And then once I got into, rehabbing houses and then building houses, I'd sit down on a Friday and, you write out $300,000 on a Friday, right? Which is like, whew, it's a heavy Friday when you start, paying all kinds of bills for all these different projects. But it makes you realize that, money, when you run a business like that, your business eats cash. And so to live on the edge where you're basically, teetering on, just barely not broke a lot of the time when you have, a bunch of projects going on. It's just not a great way to do this business. So you kind of have to balance, in my opinion, your liquidity with your project load. And the size of project and the number that you take on, so that you don't constantly walk this tightrope of, God, I hope this thing sells by the end of the month. Otherwise I'm fucked, and there was definitely some guys in there that were like, one of them had a deal that was closing and you could just see the sigh of like, oh, when that one closes, whew, that's going to feel real good. Right. And it should feel good, but it should also, it shouldn't take you to the limit financially. And you don't have to, but I understand why it happens. I did it before in the past, but a lot of these guys are just super ambitious. And so that ambition kind of gets the best of them, and they're kind of deal junkies, right? And so you kind of have to send yourself to deal rehab a little bit right now and just kind of, don't take on too much. And one guy said it best, and we've said it kind of over the years too, but real estate is not a sprint, it's a marathon, right? And so, a lot of guys get into it and they just want to sprint and do like 8 rehabs at one time or 8 projects at one time. And it's like, do you have the capital, liquidity to be able to kind of support that if things stall out or things don't sell or you can't recycle capital fast enough? Or do you have things that are set up to enable you to get access to cash so that you can continue to float things? We've, a mutual friend of ours that's, he's doing that right now, but he's got everything set up ahead of time. So like he's planned for this, whereas a lot of newer investors have not. So that was the theme that I saw. And I really wanted to, I wrote an email this week to our list that I sent out, but it was just an important topic, I felt, because I don't think people put enough emphasis on maintaining liquidity, especially in a market where houses are fairly illiquid for the most part.
Yeah, one of the things you talked about at the event that I liked too was you were talking about throttling ambition, and I think it's hard because I'm in my 20s, and I've gone through this cycle of ambition of like, hey, I want to do everything and take over the world, and that slowly unwinds. And a lot of the stuff we talked about, I learned the hard way too, like cash flow management, cash flow cycles, having liquidity. Like I learned a lot of that the hard way too, and it's important. One of the guys at the event, there's a lot of great, and they're all good operators, but he put himself in a rough spot because he was, he loaded up on flips because he has this portfolio that's spitting out great passive income. Passive is a loose term. I don't really believe any income's passive. It's like Tucker said, an AC unit goes out. That's not passive income. Passive income, about as passive as you can get, you throw money in the stock market or a bond or something like that, and it pays you out. But you're not passive in real estate most of the time, but nonetheless, he's making great money from his portfolio, and he has this number in his head that he has to get to, and so he has to buy a certain amount of real estate. To buy a certain amount of real estate, he needs a certain amount of active income. To get that active income, he needs to do a certain amount of flips. But when you're pressing too hard in terms of timeline, and the guy's he's young, he's not even 30 yet, and you're pressing too hard on that active income piece too quick, you can put yourself in a very tight spot no matter what your asset situation is. And I have family that do flips here in San Diego, and right now they have one. They do them cash, but they have one right now that most people would be hard money on it, and they're on their 3rd or 4th month of a red tag because of a very minor issue, and the neighbor turned them in. And if they had hard money, they'd already be losing money on the deal, and sit out on their loss. And unfortunately, a lot of people learn it the hard way. But I can't stress enough after this weekend, in a good market and a bad market, like you want access to liquidity. And that can be a credit line. And one of the things we talked about too, Tucker spoke on, is, build your credit lines and cash access up when times are good, right? You can go figure out how to get 100, 150, 200,000, $250,000, $500,000, credit line. I was talking to
ask for money when you don't need it. That's the rule.
Exactly. I was talking to a client yesterday who's actually at the event, and he's a client of ours and does some coaching with me as well. And he has he has access to $2 million through credit lines. And so he's really not stressed about the flips they have going on. Even they're losing money on one, he's like, yeah, whatever, like I'll float the loss for a little while and eventually it'll come back around. But I think not having to chase bad deals to feed the machine. And I really don't think for most people, a real estate should be a machine oriented business. Like I really don't think you should be trying to build. For most people, it can work. But for most people, what you do when you build a machine is you force yourself in a market like right now to have to chase bad deals. And a couple bad deals can set you back years and years and years in regards to progress that you've made. So that overall was the underlying theme from the weekend with everyone, no matter how good or bad they were doing, is, the guys that have a lot of cash and a lot of credit access, you can just make better decisions. And we're in a business where ultimately, yeah, you can grind on the phones, you can build your team, you can go to networking events, but you get paid for making good decisions. Tucker, you have to be able to know, but beyond the tangible skills of understanding how to build a house and source material and manage your contractors, like, it ultimately comes down to a decision of, am I going to buy this lot, and why am I going to buy this lot? And why do I want to buy this lot? Is it because I have to make money, or is it because it's a great deal for us and it fits our buy box? And I think most people are making that decision from the lens of, I have to make money and feed a machine. And that's why they end up hating. The market right now is hard, but people are doing deals if they're not having the pressure to chase bad ones.
Yeah, it's a challenging market. And like we talked about at the event, we're in year 23, 24, 25. We're in year 4 of basically a flat to contracting market. And to kind of compare and contrast that, I said this when I spoke at the event, but from the Great Recession, where it started at the end of 07 and then the bottom fell out, by the end of 09, which was 2 years later, the entry level market for rehab property was booming again. And we were selling stuff with like 10 offers in 2 days. That doesn't exist right now. And we're 4 years in, right? So like, though the values changed radically and quickly during that time, it also bounced back. The demand bounced back very quickly, for how big of a bomb hole it left. Right now, there's been no demand bounce back in almost 4 years. So, it's been sustained. It's been challenging. And so, what I tried to tell these guys is just, you have to be able to sustain through this business. And if you sustain through it, then you give yourself an opportunity to catch those upswings where people make a large amount of their money in a very short period of time. But you got to keep yourself in the game and give yourself options, because you don't want to be handcuffed during the best part of the cycle, which is generally where we've made the most money. Is everybody in the general public still thinks the market's shit, and you as a real estate professional see it turn, 3, 4, 5, 6 months before the media actually catches on, and they tell you from looking at numbers in the rear view that, oh, the market's getting better. Then all of a sudden people adjust their price expectations of what they want. So if you can buy heavy at that point, or really re-engage and do, as many projects as you should do during that point, those are the ones where you're going to catch that upswing, and you'll probably end up, maybe you make 2x what you thought you were going to make, 3x, who knows, depending on the area and the market. So, but you got to stay in the game. And if you stay in the game, then you can't, I wish I could, I had a crystal ball and I could pick those, those dates, for each market cycle, but you just can never do it. And so as long as you're in the game, you give yourself a chance to kind of catch those upswings and really get the big wins that, real estate can provide.
Yeah. And I think we talk about it too. Like, a lot of wealth is built in, but base hits are great. Flip houses, wholesale houses, build whatever you got to do to make active income. Active income's really, really, really important, right? I made a joke this weekend at dinner one night. I'm like, honestly, I think at a certain point you feel wealthier knowing you have 200 grand next month coming in closings than having 100 grand in cash right now. Like, having active income and projected cash flow, to me, is one of the things that brings peace, and more than anything in entrepreneurship, which is why a lot of developers and flippers, they try to find more active income streams. Honestly, anytime I see like a big developer open like a brokerage or start doing some wholesale deals or some flips, I immediately go that they're just trying to bridge the cash flow gap and have that consistency. And so you guys listening, active income is a great thing. We're not saying it's not, but staying lean, being profitable, having cash on the sidelines lets you take the big at bats eventually when you feel it's the right time, where you can have those large liquidity events, because you're not going to get wealthy on $30,000 wholesale deals. But that can be part of your overall real estate business, where you can go do that $400,000 deal, and a couple of those spread out over 5 years, you really start to pile some cash and some assets and some net worth.
But you can lease a Lambo and dye your hair purple and get on social media. So,
you can go that route too. You can always go the paid Bible study route.
Yeah, the paid Bible study. I like that. That's funny.
Cool, guys. Well, that'll wrap today. Again, we really wanted to go over what we saw this last weekend in San Diego, and we'll be doing another event, and most likely in the winter. We've done a couple of ski and snowboard events, with 15, 20 of you guys. We'll probably do another one, so stay tuned for that. We'll probably start selling that in November-ish here in the next couple of months. But other than that, that's what we got for you today. Keep crushing, try to build some liquidity so you make good decisions. Because again, you can get as good as you want at real estate, but it still comes down to making good decisions and having the liquidity to protect yourself from risk and oopsies, because oopsies do happen. They're going to happen. It's just part of the game. So until next time, a like or review means the world. We don't put any paid marketing behind this. So, you telling a friend, sharing it with a coworker, or put it on your social media is how this grows, and it continues to grow. So until next time, you're only one deal away.